Time for another stock review, this time CEG, Constellation Energy. We're talking nuclear power now. This is one of my favorite sectors. This is a sector that's going to do very, very well. But come with that is overbought. Everybody gets overexcited. Shall we find out how excited in this full review? So in this review, we're going to take a look at a deep dive analysis on the price. We're going to look at the valuation, the balance sheet, who's buying, who's selling from the inside. We're going to take a look at the news. We are going to do a full AI model. We're going to compare the ratings. We're going to have a look at the chart action. We're going to take a look at a back test so you can understand the business and the dividends. Flipping heck. Is all that coming up in this video? Yes, it is. So get ready for a deep dive analysis on CEG, Constellation Energy. I'm making this live. Please do tap the like button and consider subscribing as well to our channel. This is a big major sector which we like, but is this a good time to buy this business? Well, this is not financial advice, but this is my view of the position of the stock right now. So let's start from the beginning and we'll get more in depth as we go. So Constellation Energy, if we look at it over the maximum time that we have, you can see it's up 573%. Recently, it's exploded 573%. Very nice indeed. What is it? Let's break it down here. Here we go. Constellation Energy engages in the generation, supply and marketing of clean electricity, renewable energy products and solutions. The firm also offers wholesale energy, retail products and services. It operates under the following geographical segments: Mid-Atlantic, Midwest, New York Electric Reliability Council of Texas, ERCOT, I'm familiar with that, and other power regions segment. The company was founded in 1960 and headquartered in Baltimore, MD. The listed name is CEG, is Constellation Energy. All right, that gives us a little bit about it. Joseph is the CEO. Now, if you'd like Joseph on the show, we do have a Meet the CEO series. How we do this, it's very, very easy. Every CEO we've had on the show, it's always members only, is done like this. You, as an investor, will go on their website. You will email investor relations, tell them that you are an investor and you'd like to know more about the company, and tell them about the show. We often rank #1 for the stock on YouTube and Google, all the stocks that we cover, and they can you can build a relationship with them, telling them that you're an investor and you'd like to learn more, get to know them. They'll talk to you backwards and forwards, and when you build a relationship, then you can put them on to me. They'll call me and they'll come on the show. So you might like to do that. It's been around since 1960 and based out of Maryland, Baltimore. Okay, now we've got a new feature here, which I'd like to share with you. Digests. This was updated 2 minutes ago. This gives us, using AI software, the latest news around the stock. I like this new software that we have, as you can see, updated 2 minutes ago. Constellation Energy drops 2.5% as investors take profits and utilize lag despite no new company news or analyst actions today. Profit-taking pressure. Constellation Energy is down 2.5 today after a sharp 48% gain over the past 3 months. This drop suggests some investors are locking in profits as momentum slows. The stock remains above key moving averages, but recent gains have made it more sensitive to pullbacks. Sector rotation weighs. Utility stocks are under pressure as investors shift toward riskier sectors. With no new company news or analyst changes today, the move reflects a broader rotation out of defensive names like Constellation Energy. The broader look, we have market Market steady, utilizes lag. The S&P 500 is nearly flat and the NASDAQ is down 0.6 today. Constellation Energy's decline stands out as utilities underperform, showing investors are less focused on defensive stocks as market sentiment remains stable. However, that could change with our carry trade, which we are preparing for. As you know, I have money on standby. I'm not selling my S&P position, but I have money on standby to buy a bigger dip. Now then, let's scroll down and have a look at the basics of this stock. Low volume today. Average volume is also quite low. This is a defensive play you buy and own. Market cap 96 billion. Dividend is 0.47. PE ratio, that is the lagging indicator. The forward might be different. I'll show you what that is in a minute. That the forward is always the most important and never shown, which is crazy really, where we're going next. This is the current price. The PE ratio is 33 times earnings. It's expensive. I wouldn't pay 33 times earnings for it, but I'll explain why. I like to have a certain, I have certain restrictions on what I do as far as buying the S&P. We don't like to look at what analysts are saying because they're paid to say so we're not bothered about that. Robinhood investors, retail investors, I'm not bothered what they're doing. They don't necessarily know the right thing. Hedge funds, they were buying and now they're trimming. That gives you an indication of the general market, makes sense. And insiders, that's what's important to me. They bought relatively nothing. That isn't anything to worry about. That's a buy, draws attention, but it isn't. It's no big deal. It's a very small purchase, doesn't do anything. What about earnings? Well, we can see Q3 of 24, fantastic. And then it's been declining ever since. So our next earnings is August the 7th. If anybody wants me to cover that, as a member, a $5 super chat, I will cover the earnings for you and we'll cover it live on the show. And that could be a follow-up if anybody wants that. We'll cover the earnings live. Who else buys the stock? Well, Vistra, Broadcom, Oklo, NuScale, a lot of other nuclear power stocks make sense. Some very good stocks, a little bit of gambling stocks there, IonQ and Palantir, Micron. There's a few dodgy ones in there. Nvidia's good, AMD, Marvel, Arista. So a relatively sensible grown-up stock, you could call it that. Gives you an idea of the price action. Now let's take a look. If you've not so far, please do tap the like button and consider subscribing as well. I would very much appreciate that. Okay. So what comes next? Let's go through the valuations. We're going to start off with our intrinsic valuation. Our intrinsic valuation is overvalued by 37%. Now, I will overpay in that price to earnings ratio. You can see that now. Makes sense. It's too expensive. So people are trimming now. Makes sense. 196. We're at 309. It's too expensive. 37% over. The best case, even the best case, overvalued. Now, I don't mind paying 25% for a growth stock, which this is. However, defensive right now is being sold because people are still thinking the markets are going to keep going up. I'm not as convinced. I think defensive could play well into the next few weeks if we do get a carry trade unwind. This is where the money will go. So you might lean into this thinking, well, if we do have a drop, this is where the money will go. It is expensive. It has trimmed a little bit. It's a good stock, though. It's a good business. And the sector is good. But it might go a bit lower before we could buy in. Worst case scenario, 56% overpriced. So it is expensive. Let's scroll down and look at our valuation. So we can see the revenue is increasing up 3%. Now, if you do like my software that I'm using, I can give you the links for it. There's Seeking Alpha and Alpha Spread, both of which provide free trials, both of which provide discounts. Alpha Spread's only a few bucks a month. You might like that. Alpha Spread, I know the CEO. I've got the best deal on the planet. It basically makes my membership for free. It's that cheap. Seeking Alpha is a much more comprehensive platform. It can be thousands of dollars if you go pro. I've got pro, and I pay money to bring you the best service. If you click on Seeking Alpha, you get a free trial, and you also get a discount as well, which you can't get anywhere else. Okay, so operating income is now down, but we are expecting things to go, pretty flat though. Not expecting things to explode. We certainly don't want them to, do we? Not in the nuclear era anyway, in nuclear business. Net income is just going sideways, down at the moment. Cash flow is up 15%. Operating cash flow is up 34%. EPS is down 20%. The business itself, can you buy with confidence? Well, 52.3 billion is the assets, of which 1.8 billion is cash. I know I like that. I don't like cash-rich businesses that just own tons of cash because then just basically you're just buying someone's cash pot. You can put your money in your own cash pot and don't pay for the privilege. There's no point. So a bit of cash is good for liquidity, but you don't want 50 billion of asset and 50 billion in cash. You're just basically buying cash. 39 billion liabilities, that's high. Long-term debt, 7. Accounts payable, 3.6. Current liabilities, other non-current liabilities, 25 billion. So a lot of liabilities here. Not too much long-term debt. If we look at the pie, how it looks, the biggest is other non-current liabilities. I don't know what they are at first glance, so that's not a great balance sheet. It's not terrible, but it's not great either. Gross margins. Now, gross margins are what the company take, and then the net margin is what they're left with. The higher the margin, the higher it can compete with the competition. 12.3 net margin. You can go and compare. Now, using this software, you could go and compare to its competitors. I'll give you its competitors in a minute, and you can see, and this is really good investment strategy, you can see how the company compares to its competition. And the higher the net margin, the wider the moat, the more they can reduce prices to crush the competition. If you've got no net margin or very low, you're very vulnerable to a company with a larger margin. Makes sense? So you can go and compare the competition on this software, and I'll give you that some more information on that in a minute as well. All right, ROE. Now, if you're not sure what these terms are, if you hover over them, if you use the software, I'll just give you the link again. This is Alpha Spread. You can find out what all these terms are. I'm not going to explain everyone every time. I'll be here for a million years. ROA is 5.7, ROIC 6.9, and ROCE 8.7. There you go. Profitability 54, solvency 49. It's not a great balance sheet. Like I said, it wouldn't be a great balance sheet, and I hadn't seen that score at the point when I got to there, but I knew it would not be a good balance sheet, and it isn't. It's not a good balance sheet. However, it's not a terrible balance sheet. It's not going to zero anytime soon. It's a good, solid business. It's just not a tech business, 80-90%. It's expensive, and it's not the best profit margins and the best the debt situation at the moment. Of course, rates coming down will help businesses like this. Worst case scenario, it could go 40% down. It's too expensive. What about the average? 2% up? It's not worth buying, is it? Best case scenario, 30% up. I don't think it's worth buying at this range. I like it. It's a good sector. I would wait for a bigger dip, though. I don't think it's the best time to buy this particular sector. It was a great sector just a few weeks ago, but right now it's overbought once again. So the risk to reward, in my opinion, just isn't there right now. All right, let's go on to some further information. I've got some latest news. Oh, by the way, if you would like to tap the like button, that would be great. And consider subscribing. I think we're about to hit a very magical moment of when we get to 88,888 subscribers. And that becomes the most luckiest number in the world. We want to make sure that we cover that. It may happen in a few moments. I don't think it'll happen on this live stream, but you never know. Right, back to the review. So, some latest news just out, some headlines. Central Pennsylvania rallies in support of the Crane Clean Energy Center. Governor Shapiro announced this. There's some good news here. This has just happened. I'm not going to go into the full news, but Constellation remains on track to restart Unit 1 ahead of schedule, bringing thousands of jobs and more than $3 billion back to central Pennsylvania. Very nice indeed. That's good news. We celebrate that, of course. This is the website, just to give you a flavor of what it's all about, constellationenergy.com. It's not just nuclear, it's clean, renewable energy. That's what this business is all about. Now then, I do have some news here. Nuclear stock has renewed interest, and the artificial intelligence boom. Given the massive electricity demand from data centers, as well as Trump's administration's push to speed up deployment and licensing of reactors, the backdrop, nuclear stocks have risen substantially this year, even outpacing the S&P 500's growth so far this year. It's not just CEG. We've got Oklo, CEG is in there, CCJ, SMR, and I've covered a lot of these on my show and on X. If you've not followed me on X, I've done mini reviews on X. There it is. I often do spaces and talk about these things. Click on my X, follow me on X, and you will see what X is all about. And you can see this is my account here, and I cover these things on my X space. We're now going to bring you an AI model. I've ran it through to give you some further clarification on this stock. It's a hold, not selling. It's not a trading stock. It's a business you own, but now is not maybe the time. Maybe, in my opinion, not the time to buy more. I would wait. It's expensive. We've gone for the balance sheet. We've done all of that. We're not going to read through the company description. You can pause it there if you want to. Read it again. These are the competitors. But what is NextEra Energy, Duke Energy, Energy Corporation? But what are the unique values of this company? Well, I'm going to zoom in just a little bit more, as clear as I can for you. These are the unique selling points. Constellation Energy's unique value proposition lies in its extensive and diverse portfolio of carbon-free energy sources, particularly its leadership in nuclear energy. The company has the largest nuclear fleet in the US, which provides a significant competitive advantage in offering reliable and clean energy. Constellation's strategic acquisitions, such as that of Calpine, further enhance its capacity to meet growth energy demands, especially in high-demand sectors like data centers and AI infrastructure. The company is well positioned to capitalize on the increasing need for sustainable energy solutions, supported by its robust operational efficiency and strategic market presence. Now then, these are our numbers. A- for revisions, momentum A+, profitability B-, growth A-, valuation F. If we had valuation at A, it would be a no-brainer to buy, but it's F at the moment. Valuation appears expensive, with PE at 34, significantly above the sector median of 19. Additionally, price-book ratio at 7 is much higher than the sector's 2, indicating the stock is trading at a premium. Growth. CEG demonstrates robust growth, with EPS growth year on year at 137%, significantly passing the sector's 7, indicates a strong expansion in earnings compared to its peers. Profitability is moderate, with a net income margin of 12%, slightly above the medium sector. Now, remember I told you go and compare using my software, Alpha Spread, Seeking Alpha in other companies to see how their margins are. However, the gross profit margin is lower at 23% compared to the sector 44. That's where you can get competition, suggesting room for improvement in profit conversion. Momentum. CEG stock momentum is exceptionally strong, with a one-year price performance of 50%, outperforming the sector's 19. This reflects a bullish sentiment and strong investor confidence in the company. And revisions. Recent earnings revisions are positive, with 8 upward EPS revisions and only 1 downward in the last 3 months. indicating analysts' optimism about CEG's future prospects. In summary, while CEG showcases strong growth and momentum, its high valuation and moderate profitability may limit its immediate upside potential, justifying the hold rating. So there we go. I would say for me that this stock is not a buy right now. It is a hold in my opinion. I would say you can buy it here though, and you will be up in time. It's a good business. It will certainly improve when rates come down. That'll help their debt position and the whole business as a whole. So I see good things here, but is it the best time to buy? No. We brought you nuclear and power a few months ago. This was our number one sector, and then we went into finance. So this isn't the best time. It was the best time when we spoke about it back here. This is when we were saying time to buy energy. Not now, but will it do well? I think it will. We've also got a nice dividend as well. I'll just finish off by showing you this. This is going back to 23, just the last couple of years, so it's not that much. Constellation Energy from 10 grand to 38. The S&P from 10 to 16. So the last couple of years, it's outperformed. But if we went back further, which of course we can't with this stock, but if we could, then you would see that the S&P has done better over time. But the last couple of years, it's done great. It's exploded. Great. And the dividend they're now introducing is ever increasing. 14 cents all the way 28, 35, and now 38.7. It wants to become a dividend king. That takes 25 to 50 years, like Coca-Cola and J&J, but it's on the right path. It's paying regularly. It's increasing regularly. This is a nice business. It's a buy and hold business. I hope that helped you. I hope that gave you some clarity and some information. There you go. If you liked it, please tap the like button and consider subscribing to our channel as we head to 100,000. Click above my head for all the links. Down below in the description, I'll give you more links and more analysis. Over here, I shall put my full playlist of all the stocks I've reviewed. And down here, the playlist for CEG. So you can see all my earnings, all my reports, and everything I've done forever. We never delete anything or edit anything on this channel. That's it from me. Until next time, as always, take care of yourselves and each other.